The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Joining us now to discuss the crypto markets, ConsenSys head economist Lex Sokolin. Welcome back, Lex.
Thank you so much for having me.
Glad you're here again. So we just had the PPI numbers come out, the producer price index. It's up about 0.2%. The market was expecting 0.4%. This is, of course, the favorite metric of the Fed, allegedly, when it comes to measuring inflation. We saw also the inflation rate seems to be kind of steadying at least down a little bit. Have we turned the corner yet? Is the Fed's efforts to curb inflation really working now?
What a wonderful question. I think it's a really complicated question because the inflation situation isn't coming from one catalyst. It's not, you push the buttons of interest rates going up and then inflation is easily solved. We've had the very large monetary expansion during the COVID time. We've had very large fiscal handouts, both in the US and in many other countries, to preserve growth in the economy, or at least the impression of growth in the economy. And so, people and businesses had more money than in the past, and were able to sort of afford nominally more as a result. And that certainly contributed to inflation. But then on the other side, you have massive supply chain disruptions, which are very real after the pandemic, of kind of manufacturing chains breaking down and supply chains breaking down and materials becoming more expensive. And that's led to inflation. And then, of course, and therefore the PPI index is very important. And finally, the war in Ukraine is ravaging the energy markets and driving the costs of goods and manufacturing and transport even higher there. And so there are all of these different underlying variables, and of course, ramping up interest rates is an important button to press, and it's an easy one to understand. But I think there are many different things that really have to get fixed in the long run for inflation to subside, and that includes the supply side as well as the demand side. I think the simple answer is that we want inflation to slow and we want the economy to slow, because from a political perspective, that means rates are going to slow. But it's certainly still very complicated.
So this whole discussion, of course, is essentially the underlying issue is risk, and whether or not the markets want to take risk in a rising rates environment. We're seeing the price of Bitcoin stabilize right now at about 16,000. It's $4,000 lower than where it was a few weeks ago, especially prior to this whole FTX debacle. Have we sort of leveled off here? Is the worst over when it comes to the majors, when it comes to Bitcoin and Ethereum?
Yeah, I think you have to separate out the issues in the operating economy, where you are entering recessionary periods. You're already in recessions in some places on a nominal basis, right? So you're actually starting to have contractions in the economy in parts of Europe, and that's spreading to the US, and that's the output of the policies the Fed's putting in place. So we're entering a time where people are going to very much experience a recessionary environment, and we're not about to exit those experiences. It'll take time to clear and to reboot economies and actually have fundamental progress. At the same time, right? So I bring that up because for risk taking to happen, you want to be on the other side of growth. You don't want to be entering recessions. And then on the other side, you have these financial crises. And these are really financial industry crises that are sitting adjacent to crypto, that are sitting adjacent to venture capital and entrepreneurship. They're almost like a derivative or a growth on top of the building that people are doing. And these financial crises are very hard to ring fence and to understand what the extent is. In my personal view, I think we have not seen the full impact of the capital losses, and so there's going to be rippling through the ecosystem, at least within the financial actors in this ecosystem. You're going to see the rippling of the bankruptcies and the defaults. So I think it's still a very cautious and dangerous environment. But I don't think that changes the underlying fundamental thesis about what's going on, or what is the value of crypto assets, what's the value of Web3. So for the patient investor, it's certainly frustrating, but I don't think we've learned anything fundamentally new about what's being built.
So, Lex, I think personally, price hovering around $16,000, $17,000, given what's going on, people are calling this crypto's Enron moment, seems pretty good, actually. I thought we would have gone a lot further down. What do you think is holding up the price?
Yeah, I'll agree with you. I think the collapse of FTX is a tremendous shock. And as you covered in the previous segment, it's not just a shock in terms of the financial impact of the $8 billion, $10 billion, $15 billion hole that they happen to amass, but it's also a confidence crisis, and it's a confidence crisis in the ecosystem as a whole, which we have to realize it, we have to acknowledge it, and we have to, I think, deeply respect the capital losses and the emotions and the damage that this has done. At the same time, prices they're not the end goal. They might be a reflection of value. They might be sort of the local maximum of all the memes on Twitter. They might be the result of lots of market making bots fighting each other, but they're not the thing that you're trying to optimize. What you're trying to actually optimize is people building things that are novel, that are useful, and that anchor in the new technology and moves that new technology moves forward the frontier of what's possible. And so, at ConsenSys, we look at developers, we look at retail usage on chain, and those factors are much more important to us than kind of the capital markets price, which, as you know, can be often a result of manipulation. And so the good indicator that I'm excited about is actually watching, on-chain activities continue to be healthy, active addresses continue to be healthy, and that to me is almost more important than the price.
So in April, ConsenSys closed a $65 million funding round with the JP Morgan, MasterCard, UBS, as well as Alameda Research. I wonder, have you already received that money from Alameda Research? Do you expect them to be good on that commitment? And then a follow-up, but first that one.
That's a fantastic question. I don't know of any issues in terms of the receipt of the money from that investor at the time, and I think we've raised money after as well. So we've had consecutive raises, and after the one from JPM, the check in question, it was a small check relative to the rest of the round, and none of the individuals involved were connected to the board or the management or any sort of direction of the company. So the way I think about it is that FTX was very active, as you know, as a venture investor in the ecosystem, and they tried to invest in as many good companies as they could, and ConsenSys was one of them. But it was not material to our financial position.
What do you think will be the fallout of the so-called Sam coins? So Solana, he was big on ETH. Apparently the person, whoever drained funds out of FTX, converted everything into ETH, and now they're the second largest ETH holder.
Yeah. That one is hard to take head on, without going into a rabbit hole. I think my answer would come from what I'm concerned about is that people stop seeing the importance of token engineering and mechanism design and cryptoeconomics as a legitimate field. I personally take very seriously the idea that we have these primitives, we have these design primitives to turbocharge entrepreneurship and align communities in Web3 with the products that they use, and that there's a distinct difference to having users that have a coin or a token in the network, the protocol, the community that they're using, where you're aligning both like the benefit, the value accrual from using that network, as well as a sense of ownership and belonging and community and sort of all the stuff that comes with executing well on a token launch and activating your Web3 community. And so what I think that's a really important part of the crypto ecosystem, a really important design space, and you can take it seriously and you can kind of work rigorously to make it happen. And so what I'm worried about is that we've seen, through Solana, through some of the venture investments, through some of the information that's coming out, we've seen efforts to market make those coins in a way that creates the impression of total value locked. It creates the impression of trading volume. It creates the impression of lots of projects. And it's kind of like growth hacking in the Web2 days, where you figure out ways to get people to click stuff. And here you're figuring out ways to create things that look financial in nature. And so I'm worried that people will lose confidence in the fact that there can be a good version of that. And I think when you look at Ethereum and you look at the organic entrepreneurship that's coming out of that ecosystem, as well as, the attached layer twos and things that are kind of building collaboratively, I'm worried that the lack of trust in the Solana ecosystem will kind of spread to a lack of trust in the model. But for me personally, I think it's one of the core innovations, and we have to continue refining it and just make it more rigorous.